Quite a pleasure to be here. Unfortunate that it's virtual. Maybe next time we'll be able to attend in person. Thank you very much for giving us the opportunity to participate in this global meeting. My name is Oded Salomi. As was mentioned, I'm the Chief Payments Regulator in the state of Israel. There are many people who are regulators of payments, not only in Israel, but in multiple markets. It seems to be one of the features of payments that it is multidisciplinary. I was requested to put together a presentation about innovations and trends in payments with a focus on digital currencies. Okay, so breakthroughs and innovation in the global payments industry. Where does digital currency stand? I'd like to begin by making what may be an obvious point to some of us, and that is that digital payments are actually the most common form of payment in most markets, and that the payment in paper format has not disappeared. It will probably not disappear anytime soon, but it is no longer anywhere near being the only way we pay. If we divide digital payments into three categories, I would think about it the way we have it here on the screen, at least conceptually. So first we have account-to-account payments, moving money from one bank account to another with, I would say, four subcategories: RTGS payments, wire transfers using the ACH clearinghouse, faster payments, or what's known as immediate payments in some markets, and even checks, also known as e-checks, have become digitized in many markets. The second category would be payment cards or credentials, because many of them are no longer physical cards, and that tends to be quite large in retail payments. So in that space, we have credit cards, deferred debit cards, such as charge cards in the UK. In Israel, 80% of our cards are deferred debit, immediate debit cards, prepaid cards. Now, while the vast majority of these cards are still physical plastic, the virtual version of payment cards or credentials has been growing significantly, especially during the time of the pandemic over the last year and a half. And then in the third category, we could talk about digital currencies, which also include three subcategories that we'll go into in more detail later, but they are central bank digital currencies, stable coins, and cryptocurrencies, which are issued programmatically. Conceptually, let's bear in mind that every payment method that you see on the screen uses a given payment system, and each payment system is different from the other. And when I say payment system, let's make sure we understand what that means. We'll begin with a simple transaction where a customer comes into a store, a shoe store, let's say, which is a merchant, and purchases a pair of shoes using cash. She gives her banknotes to the cashier. The cashier delivers the shoes. She walks out of the store, and there are no financial intermediaries required. However, when the payment becomes digital, there are multiple financial intermediaries known as payment service providers, or PSPs. Let's use as an example the credit card product, which was issued to the cardholder by a bank or a non-bank issuer. And that entity is the payment service provider that works with the cardholder or with the customer. The merchant, the store, on the other hand, has its payment service provider, which is a merchant acquirer, also known as a credit card processor. Each payment service provider could be a bank. It could be what we call in Israel a credit card company. We have entities that are issuers, issuer processors, and merchant acquirers all in one. It could be a big tech, be it Google, Amazon, Facebook, Apple. It could be a fintech, an early stage or late stage technology company in the financial technology space. But the payment system is all of the rules, norms, technology platforms, financial relationships, fees that take place between or among the payment service providers. There are lots of complexities around these relationships, and they are not only technical or technological. So that payment system, the relationship between the multiple payment service providers, is what we regulate. But in Israel, like in most markets, perhaps all markets, payment systems do not require a license. In fact, there are many payment systems that are small and not regulated. When a payment system becomes large enough that it is critical to the national economy, then we designate it and supervise it. And we have 7 such payment systems that we regulate in Israel, and it's a very similar number in most markets. Interestingly, the vast majority of innovations that we're seeing in digital payments ride the rails of existing payment systems or new iterations of existing payment systems without too much innovation from square one. We don't see too many new payment systems being built from zero. In fact, it's almost none. Let's go clockwise. Buy now, pay later has been a huge space in the last year, huge valuations and lots of companies and initiatives entering this space. However, it rides the rails of card payments, payment systems, and wire transfers, mostly. P2P propositions, mobile wallets, virtual cards, digital checks, faster payments, although in some cases, faster payments were new payment systems that were created. It's evolved to the point now that even that I would describe as existing payment systems or new iterations of existing payment systems, and certainly business-to-business propositions. Lots of innovations in each of these categories, yet they are riding the rails of existing payment systems. Some reforms we are leading in Israel, and similar to many other markets, to enable some of these digital payment innovations. I'll just go through them quickly. We launched this year a review of the regulatory structure on how we regulate and supervise financial activity in general and payments specifically. We're doing what we can to remove barriers to entry and make it more convenient and easier and faster for new players to enter our market. We recently launched open banking through APIs. That's something that's been underway for a number of years in Europe, the UK, and the US. And in that category, we include payment initiators. We have a big reform that's about to go live. It's been going on for a few years, called current account switching, which basically means that at a click of a mouse, a customer of a bank could migrate her bank relationship from bank A to bank B, as well as all of the other financial relationships that are required to make the current account work with the financial relationships that she has in place. We recently launched faster payments in Israel. We're a little late to market with that, and we're looking to improve the implementation and volumes on those rails. And we're also a little bit late to migrate to EMV and NFC, something we've done in the last 2 years. We were late for good reason. We had lots of innovation without it. But since we started the migration, we're close to 70% terminals now being EMV and NFC compliant. In the last year, we've seen 7 digital wallets launch locally, both homegrown as well as international wallets. And we have several others underway, being planned to launch, in fact, by retailers, so non-financial institutions. Reforms that we plan to be leading include migrating our check to complete digital format. We're part of the way there, improving the time and cost of making cross-border payments. Lots of work in that space, both globally and locally. Improving equal access by payment service providers, which are not necessarily banks, to the payment systems. And hopefully in the next 12 months, we will pass our version of the PSD, the Payment Service Directive. So all those things should help drive more innovation in the digital payment space locally. So I was asked to mention a few trends that we're seeing globally in this space. I I'm calling out something that may be obvious to many of us, but it's worth noting. The huge valuations that we're seeing, the volumes that are growing, tend to be by fintechs focusing on niche markets, hyper-focused on, for example, B2B cross-border, maybe even in a particular corridor. One example that was given to me by a successful unicorn in Israel was, well, we're trying to provide a solution to the Pakistani freelancers that design logos for small businesses in the Midwest in the United States. What kind of use case is that? How big are those volumes really? Okay, they actually are quite big when we multiply that use case across the world. Yet it is quite a niche market. And what we're seeing is that in each one of the niche markets, there are huge pools of money and transactions. And we have financial technology initiatives that specialize in these narrow use cases, get really good at them, and then improve the user experience and cost. Another example of a niche market are what I'm calling citizens of the world, people who function in multiple jurisdictions with multiple currencies and have financial needs, or small businesses that function in multiple jurisdictions, even though they're not multinationals, they still might want to be able to sell in Europe, the US, and China. How do you service those entities? So a niche space, but with significant volumes. Another big category that we've seen recently are employers trying to provide their employees fintech as a benefit, perhaps advanced financial planning, perhaps lending against future salaries, and more. So another big trend that we're seeing is the unbundling of roles and products in the financial space by both banks and fintechs. If we think about it, historically, one of the barriers to entry to banking was that a bank did so much. The roles that it performed, both technical and technological, analytics, operations, legal compliance, and licensing, each of these is a world of its own. And to be a bank, you needed to do it all. And what we're seeing recently is that each of these roles is being addressed as a space, a standalone space by fintech providers or technology companies, or even in some cases, consultants and experts. And alongside that, we are seeing an unbundling of products and services. So on the right side of the screen, you see all kinds of products and services in the financial space that used to be performed all in one. And yet now we're seeing a huge fragmentation, literally thousands of companies, each of them providing one or two or three of the items you see on the right. And as a result of this fragmentation, we're seeing new levels of co-opetition or cooperation or collaboration among fintechs who want to provide more than the specific product or service that they're providing, as well as co-opetition and cooperation between banks and fintechs. So a bank may identify that it could use help and could get better and faster at providing a particular product or service by teaming up with the fintech. And we're seeing a lot of those relationships taking place in Israel between the legacy banks and the new fintech companies. But as we think about all this huge level of innovation taking place, we need to bear in mind the business model of the payments industry. If we count the number of transactions that a person or business performs per month in the payments space, it's huge. We make lots of payments all the time, maybe 50, maybe 100, maybe 200 per month. If we count the number of times we perform actions using our current account at the bank, it's a small number, or it's a much smaller number than payments. And if we count the number of times an individual or business engages with a credit product, whether taking out a loan or paying back a loan, it's quite small. That might happen once a month, maybe twice a month. However, if we look at the sources of revenue and profit from each of these spaces, the pyramid flips. Financial entities, fintechs, make a lot more money by giving out credit and charging interest than they make by engaging in payments, in the payments industry. In fact, payments have become so commoditized that in many places, they have become unprofitable or almost unprofitable. So why do it? Why enter payments if you're not going to make a profit? So a main reason for that is that it gives huge levels of customer engagement. If the customer is making payments so many times a month, that gives many opportunities to upsell or cross-sell other financial products, such as credit, or maybe even non-financial products. And it also gives an opportunity to make smarter risk decisions by looking at the data, smart underwriting, and maybe even identifying financial needs where the consumer is not even aware that she has a need. For example, a loan to pay for a vacation if we see that that consumer has purchased a plane ticket. So, digital currencies, a hot topic, an emerging topic. Still the volumes are quite low compared to all the other types of digital payments. But let's think about the categories of digital currencies. We'll have a fireside chat in a few minutes about the Bank of Israel's work with central bank digital currencies. But what are they? They are fiat money. For those who don't know, fiat currency is currency that's stable and issued by a central bank. So examples include the US dollar, the euro, the Israeli shekel. So fiat money that is issued by a central bank or by a sovereign monetary authority digitally. A second category are stable coins. So these are currencies that are issued by a private entity, but are backed 100% by fiat currencies. So the entity issuing the stablecoin should have a reserve of funds equal to or greater than the value of the coins that were issued as stablecoins. And it's a space that we're seeing growing, especially in the last year. And the third type of digital currency are what's known as cryptocurrencies, what we talk about most in our daily lives, reading the newspaper. These are currencies issued programmatically without any intrinsic value linked to, and without being linked to any specific asset. Bitcoin is the best known example of cryptocurrencies. And we often ask ourselves, are cryptocurrencies payment methods? It's confusing because they often have the word coin in them, such as in Bitcoin, and we call them currencies. What do you do with currency? You pay. So are they payment methods? Let's think about what a payment method needs to be before it can be described as a payment method. Well, it needs to be stable. If I have a business, if I am a merchant, such as that shoe store that we mentioned earlier, and I get paid for my goods or services, I want to make sure the value stays the same or close to the same from day to day. I spend money to buy my inventory, I mark it up, I need to make a profit. If the value of payment that I received drops significantly from one day to the next, I won't feel so comfortable viewing it as a payment method. And cryptocurrencies are quite volatile, so we don't meet that requirement. They also need to be ubiquitous, meaning existing everywhere. A payment method needs to be something that I can use to pay any business. And if it's not any business, then let's at least give a critical mass of businesses. If I can't use that payment method anywhere, how can it be a payment method? Therefore, we don't really think that cryptocurrencies are payment methods. They are actually investment assets. The reason people buy cryptocurrencies, the number one reason by far, there are number 2, 3, and 4 reasons, but they are far behind. The number one reason is to make an investment which will eventually yield a profit. So they may become payment methods eventually, but we think there's quite a long way to go before that happens. One quick last slide about some trends we're seeing in cryptocurrencies. So increasing levels of regulation are causing regulators, judges, and lawyers to become experts in this space. I think that's an opportunity because it may give more legitimacy to some of these cryptocurrencies and may eventually help them become payment methods. Much of the regulation is focusing on anti-money laundering requirements, looking at the source of funds, but not only. There have recently also been some court cases about disagreements and disputes that need to be resolved in this space. And what are people doing with cryptocurrencies? So smart contracts are big. They're basically a series of if-then statements. Let's remember, though, that most cryptocurrencies are implemented on the blockchain, which means, or using distributed ledger technology, which means that the code is immutable. It cannot change. And if there's a mistake in the code, be it deliberate or an honest mistake, it cannot be fixed because it's immutable. And therefore, that creates some vulnerabilities when it comes to smart contracts. Decentralized finance enables complex financial transactions without as many intermediaries or without any intermediaries as we have in the traditional financial space. And artificial intelligence is another place we're seeing strong use cases for cryptocurrencies. So that's a lot of stuff that I covered. Could do a full lecture on any one of those slides. Hope there's something new in there for you. And look forward to our next session on the digital shekel, or the Bank of Israel's work on central bank digital currencies.
Thank you, Oded, for that insightful presentation. It was definitely worth waiting for. And I think just like the audience, I cannot wait to hear more about the crypto projects that you're currently having at the Bank of Israel. And therefore, we like to connect with your colleague, Yoav Sofer, advisor to the Deputy Governor of the Bank of Israel as well. We will connect with him remotely for a fireside chat with the both of you.
We're both fully connected now. That's an achievement in this digital world. We thought we'd spend a few minutes with the audience talking about our digital currency project. I've had the privilege of working closely with Yoav on the Israel Central Bank's Bank of Israel's project in this space. I did mention it briefly in my presentation, but Yoav, perhaps you could share with us in more depth. When we say CBDC, Central Bank Digital Currency, what does that mean?
Yeah, sure. Let me just say that I'm really glad to be here today. You had a great talk. I always learn something new when I listen to you, and I'm very happy to share our project with this global audience on this platform. So when we talk about central bank digital currencies, we can actually think about it really briefly this way. You know, we, the public, have two main means of payment when we want to make a payment. Okay, one is we have cash, central bank issued cash, which is physical. So if I meet you in the same room, I can pay you 100 shekels physically with a note which was minted by the Bank of Israel and is a liability of the Bank of Israel. And we have our bank accounts. Okay, our bank accounts, of course, are digital. Okay, and with them, we can use the money in the bank account to pay with checks or with credit cards or wire transfer or whatever. So we have a physical means of payment, which is issued by the central bank, which is, you know, the safest and most liquid and most immediate means of payment. Okay, if I give you 100 shekels, it's yours immediately. And we have commercial bank money, which is digital, that is sometimes more convenient. I can pay you remotely, for example, but it is not immediate and it is not issued by the central bank. So if we have a central bank digital currency, the public would actually have the safety and reliability and immediacy of central bank issued money, but with all of the convenience of the digital medium, to make it short.
Cool. Very interesting. Are we a forerunner in this space? I mean, are other central banks doing this, or are we reinventing the wheel? Can you say a few words about the global perspective?
I was going to say, unfortunately, no, we are not forerunners, but I actually think this is very fortunate because this is something really big, and we in Israel would really want to see what other countries are doing as we're thinking about our own project. But to answer that more specifically, let me share a slide if I can. Second. You can see that, right?
Yes.
Okay. So, actually more and more central banks are engaged in CBDCs. We have data from the BIS, which is surveying central banks every year on this topic. We can see that more and more central banks are working on the topic. both for the retail and the wholesale sphere. We haven't touched on that. We won't have time to do that today. And they're doing a lot of trials and proof of concepts and etc. And when you ask central banks how reasonable it is, they think that they will be issuing a CBDC in the near future. So it's important to emphasize that no developed country, as opposed to several developing countries, but no developed country has yet made a decision and announced a decision that it will launch a CBDC. However, every year, more and more central banks are seeing it more probable that they will be launching a retail CBDC, whether in the short or in the more immediate terms of up to 6 years. So we're definitely part of a big pool of central banks working on this topic, which is actually a good thing, I think. It's actually interesting so I showed the statistics, but it's interesting to take some quotes from the major central banks, which are obviously in a leading position. So interestingly, that the Federal Reserve is kind of cautious, and Chair Powell has said that it's actually more important to be right than to be first on this. President Lagarde of the ECB seems a bit more enthusiastic, and they have actually launched a 2-year project in which they will be assessing whether to launch a CBDC or not, the digital euro. And the BIS, which is kind of the parent organization of central banks, actually thinks that the time has come and it's important that central banks start working on this. So a very vibrant global sphere on this.
Yeah, so absolutely a global trend. I don't know who caught it, but it's over 85 central banks already doing something in this space.
Right.
So let me ask you a question. I talked about some of the really cool things that are happening in payments and digital innovation, and we have lots of very stable payment systems domestically, and we see this worldwide. Why do we even need a central bank digital currency in Israel or elsewhere?
I think that's a good question, and this is exactly the question that we are asking ourselves. I think, circumstances can be different in each jurisdiction, and each country would need to make its own decision. But we are really sincerely asking ourselves this question. And not only, as you said, that we have a very developed and developing payment system, which is, I think, serving us well, serving the citizens well. We should also remember, did I lost my sharing?
You did.
I don't know why that happened. So let me try that again.
It's back.
Okay. We should also remember that CBDC doesn't come without risks. Okay. The main risk, which has been studied very thoroughly in the literature, is the risk of bank disintermediation. The money that we keep in our current account in banks is actually used by the banks to provide credit and liquidity to the economy. So if people prefer to put their money with the central bank digital currency as opposed to with the commercial banks, that could have some significant implications. There could also be implications on the monetary policy and the monetary transmission. There could also be some operational risks, cyber risks, risk to privacy, and not less importantly, a risk to the reputation of the central bank if we mess this up and we don't do this correctly. And the reputation of the central bank is something very important, not only for central bank staff and management, but also for the economy as a whole. So going back to your question, do we actually need this? We published a report last May, and we did a lot of work prior to that, trying to establish what could be the possible motivations for Israel to launch a CBDC. And we actually came up with 6 main motivations. I should stay up from the start. I personally, at least, don't think that any specific one of them is a significant enough motivation for Israel to launch such a significant reform, but it may very well be that all of them together might actually pose the critical mass that is needed for us to decide to launch a digital shekel in the future. But we'll have to see about that. So very briefly to list those motivations. First is alternative and competition. Okay, we know that cash is actually providing a competitive pressure towards the existing financial system because, if the credit card system, for example, doesn't serve you well, you could always go to cash and it's an alternative. And you may want to preserve this alternative also in the digital world. Okay, so that I can pay you remotely with with central bank digital money, not only physically if we're in the same room. We also need to provide an alternative to private means of payment. You discussed cryptocurrencies, which are not yet posing a threat to the payment system, but stable coins or any other initiatives that are issued by private, local, or global institutions might actually risk the existing financial system. And we may want to provide the digital and the technology and the innovation in the digital money by the central bank digital currency. That brings me to our next motivation, which is actually innovation. We know that cryptocurrency brought the topic of smart contracts and programmable money and things like that. These are currently mainly used within the crypto, society. But it would be very interesting to understand if smart contracts and programmable money could actually be used by households and by small businesses, and to make this a significant change for the whole economy. Our third motivation is redundancy. Our system, which you're in charge of, has been very stable, touch wood, and is, we haven't had any significant malfunctions. However, redundancy, and I think especially in the case of Israel, an emergency preparedness is always something in focus. So if we build our CBDC as a separate system, or as separately as possible from the existing payment system, we might actually be providing redundancy and resilience to the infrastructure as a whole. Cross-border payments, you mentioned them as well. They are currently very inefficient and expensive. And there's a work around the world to see how to streamline those and to make them more accessible to all and cheaper and more efficient. It may be the case that CBDC would be the infrastructure that the global discussion would lead to as what the infrastructure for cross-border payments in the future. And if that would be the case, Israel would also want, of course, to be on that train. Israelis travel a lot and buy online a lot, and cross-border payments are significant for us. Another topic is privacy. Cash, for better or for worse, allows us to pay privately. Okay. Now, of course, we don't want to maintain the worst part. We would not want to issue a completely anonymous means of payment like cash, but you may want to be able to preserve a person's ability to enter, a grocery store and buy himself whatever, without his financial institution knowing where he bought and what he bought. Okay, that may be a right that people may want to preserve. Maybe not. Maybe I'm happy for my financial institution to know about my consumption habits and provide me, commercial offers. But maybe I want to have the right to be able to continue to pay privately, also in the digital sphere, not only if I can enter a store with cash. So this would be something we would have to think about. And the last point is actually rather significant, rather exclusive for Israel. Actually, many of the countries that entered the CBDC discussion were doing this because cash was disappearing in their countries, and they were asking themselves whether they need to provide a digital means of payment of the central bank in lieu of the disappearance of cash. Cash is still relatively king in many parts of society in Israel, and the government has a policy to reduce the use of cash in order to struggle the underground economy. And we think that if we do the CBDC properly, to be catered also for the non-technological savvy parts of population, we may be able to support this goal as well. So lots of motivations, and we're exploring all of them.
Very interesting. So I know we're still exploring. We should just say openly that the thinking here is quite complex and takes account of both technology, legal, and payments considerations. I'd like to maybe invite you to say a few words about, what does the digital shekel project look like at the Bank of Israel? What have we done? Right. What do we plan to do? It's
important to emphasize that, it's not actually really, projects usually have like a starting date, a timeline, and an end date. Okay. And as I said, we haven't made a decision yet. So what is this project? We're actually building an action plan. We want to be prepared for the point where, if we decide that circumstances are as such that it is time for us to issue a CBDC, we're prepared, we've done all the analysis. So what are we doing? First of all, we're doing a lot of economic and payments analysis, trying to understand the implications. I mentioned the risk for the banking system, risks to the monetary policy operation, and et cetera. And also, you described earlier all of the developments in our payment system. Will we maybe be risking these developments by actually telling the community that the central bank is entering the arena once again? That's something you need to think about. There are also a lot of legal implications that you need to analyze. We're also evaluating the technologies. CBDCs are often oriented with cryptos. They are not cryptocurrencies, not at all, and you explained that. However, it may be the case that the blockchain technology behind the cryptocurrencies might actually be useful for the construction of CBDCs. So we're looking at that. We actually even did some kind of a POC in the, well, I'd call it just an experiment in the Ethereum environment. We were trying to study this technology and look at its implications and limitations and benefits. That doesn't mean at all that we will be using Ethereum if we decide to issue a CBDC. It's just, a technological study. And another thing we're doing is we're liaising with stakeholders. Not all of the wisdom regarding this topic is at the Bank of Israel. And it's very important for us to hear the technological industry in Israel, the payments industry, government, academia, economic organizations, and the general public. And this is something we've been doing over the last several months. So we're trying to build, to put us in a situation where, I guess, I don't want to put this timestamp, but at the near future, if we come to a conclusion that it's time to issue a CBDC, we will have been ready.
Outstanding. So if we were thinking about the people in the audience, we know they include a number of entrepreneurs and technology executives. And we also have some people in the audience from Israel, I believe. What do we think entrepreneurs or technology players should be doing in this space?
Right. So in the CBDC space, and maybe you can say later, about opportunities in the payment system in Israel in general. But I think that in the CBDC space, entrepreneurs should be thinking, what would be, first of all, the systems that would be needed to construct a CBDC system. And we know that there are a lot of companies on the race right now trying to suggest, their infrastructures and their technologies for countries to be building CBDC. But I think we also need to think about the innovations and the services that could be used on the CBDC system. Okay, for example, how do you make use of smart contracts for the use of the household and small business? Okay, how could programmable money be supporting the real economy and not just the crypto economy? And countries are at different stages regarding CBDC, but I can even say that not only it might be useful once countries launch, but I think that if governments and central banks actually are exposed to the opportunities that all of these services which would be using CBDC would be bringing to the payment system and to the economy, that could really impact the decisions. So if I was an entrepreneur, I would be trying to think, what would CBDCs look like in 5-10 years, and what I could be offering to this technology in the benefit of the real economy.
Yeah, I think it's fair to say that one of the things we talk about, you and me and the rest of the team here, is what's the business model for the distributors of CBDC? So we know with cash, banks will distribute the cash to the public. It's not necessarily something they like because it has a big operational burden, but they're a bank and it's part of what they are required to do. And they have their business model. If there's a non-bank entity that will be digitally distributing central bank digital currency, how do they make money? And I think what you're saying is they can add value through smart contracts and other things, and perhaps build a business case. And that maybe goes back to the pyramid that I talked about, where, if we expect consumers to be using CBDC many times a month, maybe that could be a platform for further engagement and other upsells. Maybe also just to respond to your question about what fintechs can be doing in Israel. So we do have an aspiration to make the market open and accessible to Israeli and non-Israeli entities that have new offerings and innovations in the payments space. And one of the challenges we have as regulators is that even though Israel has a huge number of unicorns, more unicorns per million people, I think, than anywhere in the world, and out of that group, a huge number of unicorns specifically in the payments space, we have a hard time making Israel as a market attractive because it's not as large as perhaps the UK or the US, and because we'd like to become more attentive to the needs of the technology players. So this is a call out to all of you watching. Please do take a look at the Israel market. It's quite big, and well, compared to some of the markets, it's not quite big compared to the US and the UK and Germany, for example. And still, it also provides opportunities for engagement with some of the more advanced technology players in the world.
Right. Great.
So I think we've used up our time. Thank you all for listening. We're looking at a screen, but we understand that we're looking at many of you who are watching us. And we certainly hope to be able to engage physically in the not too distant future.
Let's once again thank the organizers for the opportunity to participate.
Absolutely. Thank you for the opportunity. We appreciate it.